Okay, good morning, everyone. Carrie, if you'll give me control of the screen, I'll bring up the PowerPoint. I suppose we could have a conversation here. I can go in while now I can share. Okay, let's see if Marcia remembers the appropriate way to share.
And Marcia, as you're getting ready to share, and I am seeing your internet browser just right now, but there you go. Your slides are up. You may be going to announce this, but since I'm monitoring the chat room for you, do you want questions as they pertain during the middle or just save them till the end?
I'll let you make a judgment. Does it look like a real important one, or if it's one that I think I'm going to get to? Okay. Well, let's have an official welcome to everybody. This is our very last Fabulous Fridays for this time of the year, and I want to express appreciation to the Montana 4-H Foundation and the Montana 4-H Center for Youth Development for sponsoring Fabulous Fridays. And as a matter of fact, I can tell you a secret. They are going to sponsor us again in 2022. So that means we'll have more available for you that some of you might be interested in tuning in again. So our title for today, I originally called it Taxes and Estate Planning, but the truth is it's about death taxes. Yeah, that's what they use in the newspapers when they're talking about inheritance taxes, federal estate taxes. And what I find is the reporters mix them up and they don't necessarily know what they are. So we're going to figure it out. Well, the team for today is myself and Carrie.
Marcia,
yes.
I'm going to interrupt just a minute. Your meeting reminders are on the screen right now.
Oh, thank you.
And we don't want them to cover up Carrie because she is so wonderful and so important for getting these things done.
Thanks for pointing that out.
Yep,
I
no
get
worries.
so involved that I don't notice things. So there I am, and there is Carrie. And as Jane says, she's really important, but I'll get my introduction over with. We got some new people. I'm Marcia, and I'm with MSU Extension. And I keep telling people I'm your taxpayer dollars at work. We are representing the university and taking information out to the people. And Carrie is the webinar assistant and all around good person who does the very marvelous websites that we have. She's put together resources that you can go back and use. So you want to take a look at that after today's sessions. And then eventually, and really soon actually, is she's able to get up the YouTube taping, or I guess the new term is recording, and she has a downloadable version there. So pick out what can be useful to you. And I'm going to say find your star because you are in there somewhere. We have had 303 Montanans register for our Fabulous Fridays. And of course, we haven't had that many participate every time, but I'm delighted to have you, those of you that are here, as well as our out-of-staters. It's really exciting when you see people from other states participate, but I keep betting that they have some parents or maybe children that have to be located in Montana. So we have been encouraged that when we're going to do a webinar, to have participant engagement tools. And one of those that I learned along the way is have a contest. So about halfway through, we started having contests. So this is your opportunity today. What percent of Montanans end up paying the federal estate tax? So what you're going to do is write the percent in the chat room and we'll move along, and then there will be a certain time where I have to say, nope, 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 you can't anymore because I'm going to give you the answer. Okay, and we did have a winner from last week. Remember, we had a question about what percent of Montana or Americans age 80 and over have a financial power of attorney, and that was 73%. And we had Lynn from Missoula that said 80%. So I've got some cards off to her of our wildflowers, and I hope by now, Lynn, you've received those. Now, you know that I use wildflowers as reminders for some of the things I like to talk about. And the reminders, I used to say triggers, and Jane was the one that said, Marcia, that's probably not an appropriate term to use today. And I had to agree. So now they're reminders of some of the concepts. But first, our other engagement opportunity is for you to share what actions you have taken since our last session last Friday. Did you review your financial power of attorney? Did you review the healthcare power of attorney? I had lots of questions about the 5 wishes, for example. And I mentioned the only challenge with 5 wishes is that now there are HIPAA requirements that are not in the 5 wishes. So just to let you know about that. So did you read the Mont Guide about financial power of attorney? Did you share the information? Or I've always got that other category. Please write in the chat panel something else that you may have done. Now, at this point, I've got to beg your forgiveness. There are those of you that are participating in Fabulous Fridays that have emailed me, and you're thinking Marcia Getting must be dead herself. I kid you not, I've just had an overload of emails. So I promise I'm going to get around to yours. So hang tight and I will get there. So don't forget, ask those questions. And let's see what actions did you take as a result of the last session. So I'll have Carrie take a quick look at that. And let's just see if people are doing something. Uh-oh, as usual, we've got about half of you that aren't responding. And the thing that we're finding is they're sharing information. So what we might say is, gee, I hope you're doing some things, but on the other hand, you can't review a healthcare power of attorney or financial power of attorney if you don't have one. So I hope you will give serious thought to doing something with your powers. Now, last one, opportunity. Don't forget the pine drops with the question mark says you can put those questions in the chat room. And today Jane is going to be doing that for us. And I want to introduce to you Jane Woolery. We're going to hear more from her later, but she is our MSU Teton County Extension Agent in the Family and Consumer Science area. And she also works in the 4-H area. And she's had a long, marvelous career, and I think she's got some great stories that she's going to be able to share with us. So the steer's head, what is it I'm going to steer you to today? Well, how about the truth about death taxes? I like that title. It's supposed to grab you. And then I also want us to consider, are we going to gift while we're alive, or are we going to wait until we're gone and leave a bequest to people? I thought it might be fun to look at the tax consequences of some of those decisions. So if you remember, we have the Richardson geranium, and that was introducing Granny Richardson in one of our other sessions. And what we want to do is look at Granny Richardson and the inheritance tax. Now, states have inheritance taxes on the dollar value that a person inherits. And at one time, there was a gentleman that shared with me that he didn't have any children. And what he wanted to do was leave his farm to the kid down the road. He had watched this kid grow up. He knows that kid is going to be really good. But guess what? The kid had to pay, or it came out of the estate, a 37% tax rate. So we're going to have Granny Richardson pass away. So we can be sad about that. And we know that she has this Ferrari that's worth $1.4 million. And what she has done is bequeath that. In other words, she willed it to her son, Mark, who happens to live in Bozeman. So the question for you in our first or our second poll is, what percentage rate will Granny's estate have to pay for that inheritance to Mark? So in other words, what rate would have to be paid because he's a grandson versus that other one that I showed, stranger in the blood? So Carrie, if you will bring up that poll, we'll have a chance for people to take a look at that. So your choices are 40%, 28%, 12.9, 6.9, or 0. So what percentage rate do you think that Granny's estate is going to end up paying based on the relationship with the grandson? So I encourage you to fill out the polls. It makes it a lot more interesting for the others and me as well to see what it is that you're thinking about with these polls. So you've had 35 seconds. And I think we're just going to move right along. Carrie, if you will bring up those results, please. Okay, we're looking at here that we had, what, 28%, or I'm sorry, 5% said the 28. We've got different ones. Most of you, no answer, but the majority we're looking at here is saying 0. Okay, and I see I really didn't fool anybody, did I? I mention this because when I've done public meetings, people still think that we have an inheritance tax, and we don't in Montana. There is no longer an inheritance tax. So it doesn't matter if you're leaving it to a family member or you're leaving it to someone stranger in the blood, there is no inheritance tax. So the Fabulous Fridays tip from our Richardson's Uranium is, since we don't have one, don't let a disbarred attorney coming over into Montana from North Dakota tell you that you need a revocable living trust because of the inheritance tax. I mean, my goodness, that's false. Absolutely. Now, the second death tax that we're going to look at is the federal estate tax. And what is it? Well, it's a tax on the fair market value of the assets at the date of death. So we're going to take a look here at Granny. And remember, she had $1.4 million in this crazy car. And of course, I'm thinking, who would pay that for a car? But Granny, you know, she's with it. And the other thing that she has is a ranch. No, it is a ranch in eastern Montana. And it's worth 10 million when she dies. So when we add those two together, we find out that Granny has $11.4 million in her estate with those two assets. So what we're going to do is look at the percentage rate that Granny Richardson's estate will have to pay. So Carrie, if you'll bring that one up, we've got a choice of 40%, 28%, 19.9, or 6.9. So this is the value of the whole estate. When you die, everything that you own is put in a pile, so to speak, and the fair market value is placed on that. You add all that up, and then the federal estate tax is based on the total value of what you have at your date of death. So think about that. Okay, Gary, let's see what the people are saying. Okay, we can see here that we've got 2% that said 40. We've got 9% that said 28. 20% said 0. Okay, well, let's see what group happens to have the right answer. And the rate is indeed 0. So the 9 of you that said 0, good for you. You have been alert, or perhaps you've been to one of my other meetings, or you've read this on your own, because you see there is a federal estate tax exclusion. Okay, that means this year you can have $11.7 million. 11,700,000, and you as an individual do not have to pay a federal estate tax. And that's why when I read some of these newspaper articles that are going on and on about the federalist, or they call it the federal inheritance tax. No, first it isn't. It's the federal estate tax. And they're saying, oh, it's awful and blah, blah, blah. Well, gee whiz. No, it's only if you have above 11.7. And you see, couples can double that because they each get 11.7. So a married couple can pass $23,400,000 and not pay a dime in federal estate taxes. So I guess I'm making an assumption that certainly I, as a state employee, don't earn that much and don't have an asset like that. And some of you may be in the situation too where you thought you were going to have to pay a federal estate tax, but we're looking at the dollar value differences. So you see, oops, contest is over, okay? And the federal estate tax, however, affects less than 1% of Montanans. When we look at the Department of Revenue and the estate tax filings, we find it's less than 1%. So, right, it does affect some people, yes, but the majority, 99, almost 99.9% is the way it is. So now we've got a new flower. You haven't seen this one yet, and it's called the pink corydalis. And came across this one in Glacier National Park after a fire in one of the areas. And it was the only green thing there, and it was also blooming. And I go, what is this flower? I thought it was so cute. Well, that reminds me of a couple that I met at one of my meetings. And my goodness, their name is Corey and Dallas. Well, Corey and Dallas are thinking about a decision. You know, they're saying, Marcia, what do you think is best? Leave a bequest at death, or should we make a gift while we're living? Or should we do a combination of those? Well, I can't really tell people what to do, but what we can think about are some of the considerations. And why would you wait until you die? Well, Corey and Dallas said they're concerned about having enough money to live on, so they just as soon wait until they pass away. And then I think all of us at the back of our heads have long-term care expenses. You know, what are those going to be? We don't know. What if we get Alzheimer's? What if we get some other form of dementia? Long-term care expenses. And then, Corey said, yeah, I'm kind of concerned about spoiling the grandchildren. I had some friends that left a lot of property, and those kids just aren't worth a dime. Okay, well, that could be a good reason to wait. And I think of ourselves, and we've worked, we used to say outside the home for pay for the women, but we have, and we don't want those kids to waste our hard-earned money and watch them do it, do we? And then we may have some left over that we want to have for our favorite nonprofit, like the 4-H Foundation, for example. So Corey and Dallas, we talked about that for a while. And so then I said, well, what would you think about gift? How would you feel about gifting while you're alive? And I said, well, that would be good because that's a way that we express our love and our affection for our family members. And it would give our children maybe an opportunity to participate in a family business. It might be a downtown one, or it could be a farm or ranch. That could be a possibility. And maybe you're wanting to help the children with a college education fund. And maybe even the grandchildren, and you would like to give them that money now when they really do need it. For some people, it's paying off medical expenses for children or grandchildren. And then both Corey and Dallas said, by giving it now, we would be able to enjoy watching them enjoy what we give. So that would be a very legitimate reason for gifting as well. So that's one of the things that you need to decide. I say need to. It's an opportunity to make a decision about whether or not you want to do one or the other, or do a combination if you have the resources to do so. So I'm kind of curious of our group today, what are you going to do? Are you going to gift while you're alive? Are you going to wait until you die? Or are you going to use a combination of those two things with your beneficiaries. So tell me by voting in the polling box. Oh, and don't forget to hit submit. I keep forgetting to tell you that because the first time I did this, I answered it, but my answer wasn't recorded because I didn't hit submit. Okay. Okay, Carrie, what do we got as results? Well, we've got 8% that are going to wait until they die. And we've got the vast majority of you that are really going to do a combination. And unfortunately, we have half of you not answering. So boy, would I like to know why we don't have answers, but we'll figure that out someday. So shutting the poll off. Now we're going to look at the golden prickly pear. Okay, and I call it the golden because what it reminds me of is to talk to you about the living tax. And you say, come on, what's a living tax? Well, it's the income tax for one thing, but it's also a tax on gifting from one person to another. So if I was going to gift some money to Carrie or gift some money to Jane, okay, there's some rules that go along with that. I can't just willy-nilly give them the money, which I'm sure they would appreciate. But we have some golden rules that the Department of Treasury has come up with, thanks to Congress. And what they've done is established rules about gifting before you die. Okay, so they do have a definition of what gifting is. And basically, it's when you give something and you don't receive something in equal value in exchange, okay? So, or less than full value. So let's just look at an example here. Maybe Corey would sell 500 acres of land and it's valued at 1 million. Well, hey, if you're selling it for $1 an acre, that's $500. It's not fair market value. You see, you haven't received something equal in exchange. So that means you've made a gift of $999,500. Okay. If you have a home, okay, and you put your daughter's name on the home. I've got lots of people doing this. We've talked in other sessions about the consequences of doing so, but there's also this gift tax consequence of you have gifted this value of home, half of it. It's joint tenancy, 50-50. And so therefore you've made a gift of $175,000. So I want to know, what's the dollar amount of gifting that you can do every year to as many people as you want to? So I could gift a certain amount of money to Carrie, certain amount to Jane, and it's exempt from the federal gift tax. So what's the dollar amount that you think that you can give in 2021? 3,000, 6,000, 10,000, 12,000, 15,000. Excuse me. Okay, Carrie, what do we got here for people gifting? Okay, we do have an individual, a couple of individuals that said 3,000. We've got mostly no answer, but we did have 17 or 35% say 15,000. And those are the individuals that have it correct. So this is what you can do this year. If anybody's feeling extra generous between now and the end of the year, you can give $15,000 to as many people as you want to. And that is tax-free. Now, after the first of the year, it's going to go up. Finally, I don't know if it's good, but inflation affected that 15,000, and now you will be able to give 16,000 to as many people as you want to. And there's a concept of gift splitting. For example, your spouse could join in the gift and you can give $30,000 to as many people as you want to. Okay, now it doesn't have to be dollars. It could be a home that's worth, oh yeah, try to find a home for 30,000. But that amount is going up in 2022 as well. You can give 32,000 to as many people as you want to. Now, there are some exceptions in there. Let's say that you're wanting to help somebody with medical expenses. In that case, it's unlimited. You can gift, but you need to write the check to the provider. So it's not going directly to a person, it's going for this expense. And the same way with tuition payments. You can pay the tuition for an individual as big as they are, and there's going to be a big difference between Montana State University tuition and, let's say, Harvard, for example, and particularly if you're paying out-of-state tuition. But the IRS has an exception to that. So what I'm going to do is now look at Grandma again. And this is Grandma who has a golden $15,000 that she is giving to her adult granddaughter. Okay, and I'm proud to say this is a lady that attended one of my meetings. Actually, the grandma in one location and the grandchild in another. And when we look at the total amount that was gifted, we know it was $15,000. And here's what the granddaughter said. Well, she wrote a note, a thank you note, a real handwritten thank you note. And she says, "Dear Grandma, I want you to know what we did with the $15,000 that you gave us. We are so grateful. I opened a Montana medical care savings account for myself and put in $4,000. Okay, she opened up one for her husband too, and that's $8,000. Oh my goodness. Already they are going to be able to take $8,000 off their Montana income because they put it in Montana medical care savings accounts. And by the way, you as a watcher can also still open a Montana medical care savings account until the end of December. You can actually open it on the last business day. Put in $4,000 and you get to take $4,000 off your income and you're going to save $276. Okay, what else did the granddaughter do with the money? She opened an IRA and they didn't own a home yet. So she put $3,000 in a first-time home buyer account. So she says, "Grandma, this is the way that we used all of the money, $15,000. Again, very grateful. And then guess what she's able to say? And Grandma, would you believe that as a result of the gift that you gave to us and the way that we used it, we were able to save a total of $2,285 in state and federal income taxes." Whoa! If you were Granny, what would you do next year? Well, in most of my live audiences, they say, give more, give more. And then I tell them about the grandson. Grandson also received $15,000. Yep. Guess what? The grandson did not even send an acknowledgement that he received the $15,000. Incredible. But I think Grandma knows what to do now. By giving that money, and that was the discussion, by her giving the money now, she would have the opportunity to see how they use it and, in her words, take appropriate action. So the Fabulous Fridays tip from our golden prickly pear is gifts do allow grandparents and parents to express their generosity while they're alive and see how the recipients use the money. Now, you met Albino at some point, and that's what it is an albino fairy slipper, and on the right is what it looks like. But it seems like it reminds me of someone. Oh, but we're going to talk about basis. Now you're going to say, oh, wait a minute, what is that? Well, it becomes very important for gifting and bequeathing or leaving an inheritance. And what is basis? Well, basis is the amount of the investment you have in an asset. It could be real property or it could be personal property. And when I'm saying personal, I'm thinking, stocks, bonds, mutual funds, because those values may go up and down. Okay. So we want to look at the differences. Since I was talking to Corey and Dallas about gifting while you're alive and leaving an inheritance after death, what impact would basis have on that? So let's look at Grandpa Albino. He's got ranch land out there, and way back in 71, he paid $50,000. So $50,000 is Grandpa's basis in that property, okay? And Grandpa Albino has been doing some thoughts about succession planning. In other words, he's looking at his grandson, and he feels that his grandson, yeah, he's young, but he was in for age. He's very mature. He feels he's ready to operate the ranch. And besides, he wants to minimize death taxes. Okay, so he gifts the land to his grandson in 2021. The land value when he makes the gift is $6 million. Okay, our question then, does Grandpa Albino have to pay a federal gift tax on the gift of the ranch at $6 million to his son? Now, I think you're all going to get this one right. Shake your head, yes, yes, you were listening. Okay, so it's very simple, yes or no. You should be able to do that one real quick. Okay, we've got some people. Oops. You know, this is the point at which I was testing my teaching ability, because I thought I would throw in an easy question. You would all get it right because you were listening before. Well, we've got people that are saying yes, and we've got 22% that say no. Okay, and then we have those that didn't respond. Does Grandpa Albino have to pay a gift tax? And the answer is no, no. And why? Hey, don't forget about that applicable exclusion. So you see, Grandpa could have given his grandson a ranch that was worth up to the $11,700,000, and he still wouldn't have needed to pay a gift tax. But let's take it to the next step. If there was Grandma there, they could have gifted up to $23,400,000. That's how high the exemptions are for the gifting. So no gift tax in this case. But now we want to know basis. You see, Grandpa had a basis in the property of what? That was $50,000 because that's what he paid for it. Okay, then we have the fair market value of $6 million that Grandpa, when he made the gift, that's what it was worth. And then we have the difference between the two. And what I want to know is this gift that went from Grandpa to the grandson, what is the grandson's basis? Is it the $50,000 that Grandpa paid for the land? Is it the $6 million fair market value when the gift was made, or is it the difference between the two? So this is your opportunity to guess. Okay, doesn't cost you any more to make a guess there. So even if you don't know, throw something in there, at least click, and then I'll know you're engaged, right? But not to be married. Ha ha. Oh, don't make jokes, Marcia. Okay, Carrie, let's see what our participants are saying here. Okay, we're looking at the results, and we've got 5 people, 10% that said 50,000. We've got 18% that said 6 million, and we've got 28% that said the difference. Okay, well, in this case, 18% of you got it right. You see, when a gift is made, you assume the basis of the donor. So here's these fancy words. Grandpa is the donor. The grandson is the donee. So that 50,000 in value passes to the donee. Okay, let me repeat that again. When you gift something, there is a basis to that gift. and the gift goes over to the person that you're giving the gift to. So let's say that Albino grandson decides he's going to sell the place, and he sells it for the 6 million. Well, what is his capital gain? You're getting it now, aren't you? Wow, sales price 6 million, basis 50,000. What is the capital gain to the grandson? You know, somebody should have talked to that grandson. He's got $5,950,000 as a capital gain. Now, he should have visited with his CPA before he did this. So we look at what the taxes would be, and $1,600,550. Okay, now that's because the grandson sold it, and he could have sold it later, and if it was worth 10 million, we've got an even bigger tax. And why? Because the donor's basis carries over to the donee, the person that received the gift. So now we want to examine a difference. We're going to look at leaving an inheritance because grandpa has a choice, right? And in this other case, grandpa, Albino, did not talk with his accountant or his attorney. He's just going to buy gum. He's going to give that, do a quick claim deed, and he's going to give that to his grandson. Well, I don't want him to do that. I want him to think through consequences. So let's take a look here. Grandpa dies. We want to now know the basis when Albino inherits property. Okay, is it going to be $50,000? Is it going to be 6 million? Or is it going to be the difference between those two figures? So even if you missed the last question, take an opportunity here to think it through and say, okay, this is my answer. And see, you're not in a crowd, so I can't say, hey, Susie out there, what did you think? And make you feel embarrassed. You get to do this anonymously. Okay, 50,000, 6 million, 5,950,000. And we're now looking at basis of inherited property. Okay, what have we got, Carrie, with our participants? Okay, we've got, I think this is a repeat of the last one, 12%, 28%, and 16%. Aha. So let's see which group got it right this time. It's the $6 million. In other words, our assets, when we die, have a fair market value. Okay, and in this case, the fair market value was $6 million when grandpa died. Okay, that's one of the things that we have a probate that the personal representative will be taking a look at. So you see, what happens then is the albino grandson assumes the property at the fair market value at the date of death. And that amount was 6 million. Okay, so let's say the grandson does the same thing. He's going to sell this land that he inherited for 6 million this year. What is his capital gain? 0, because he sold it at that $6 million figure. So there's no capital gain. There is no tax on that. So we can do a tax comparison there. And we see that, my gosh, if I gift an asset and he sells, that's the impact, 1,600,550. An inherited asset that's sold, 0. Now, there are other reasons to make gifts other than just looking at the taxes. But I'm kind of a family economist, and one of the things I like to do is create an awareness of consequences of decision making. And this is certainly one of those. So if indeed we look that Albino grandson happens to sell the property in 2071, I'm sure we'll have law changes by then, but the value is then stepped up at his fair market value at date of death. So that's what we've always done, is step up property in value. We step it up, it becomes generational. Each generation receives a step up in basis. Now, it may not be a big deal if you don't sell it, but it could be a big deal. So at this point in time, each generation is going to receive a step up in basis. So as we look at this from a tax savings viewpoint, you know, I hate to tell Grandpa Albino, well, you're better off dying and leaving it to your grandson instead of gifting it to your grandson. But he still may want to do the gifting because he says, I don't think my grandson will sell it. And I want him to be able to feel like he is now in charge of the operation. You see, that's a different estate planning goal. That's okay. You decide what your estate planning goal is. Then we have the Pinstamans, and they used to be, I call them the singing and playing, but what we're looking at is Champ here. And Champ is wanting to make a gift. So he decides he's going to do some legacy planning with me. And he's wanting to do a gift to MSU, and he's wanting to reserve it for the 4-H Foundation and Extension both. Okay, and he finds that he's going, I calculate for him, $690 he's going to save. And you know what he says? Well, is that all? And I go, well, what's the deal? That's, you know, that's important. But his friend Monty, okay, he purchased a deferred gift annuity at the University of Montana. And he tells Champ that, hey, I saved a lot more than you did. Grr, grr. Okay. So we've got this bear, or Grias, I guess we might say, is kind of making fun of Monty because Monty didn't get as good a deal. So Champ is thinking, well, what if I did something like that? I make a planned gift. Could I save as much as Monty? And I say, well, sure, because you have the Montana Endowment Tax Credit that you would be eligible for, but it has to be a planned gift. But guess what? You get a tax credit, not a deduction, but a tax credit up to 40% of the value of the gift, or $10,000 for an individual and $20,000 for a married couple. Well, this gives Champ an idea. What he's going to do is search for a Mrs. Champ in the Bridger Mountains near Bozeman so he can get a double tax credit with the Montana Endowment Tax Credit. Business entities, if you have a sole proprietorship, an LLC, S Corp, all of those, you can give cash and you get a credit of up to 20% for giving. And Champ just wanted to know if he did buy one, he delays the payments. This is a planned gift. Well, he gets to save $3,600 right off the top of his tax bill. And he's rather excited about that. And if he does this when he's 70, at age 75, he could receive $620, or at 80, he's the one that decides how, you know, he's deferring the payments to himself. So on behalf of the MSU Foundation, Champ is thrilled. President Cruzado does accept the money that he has done for this deferred annuity. And then we've got Champ jumping for joy here at MSU. And I'm sure that he's doing this before he heads off to the University of Montana for that big important game this weekend. And we have our Pinstamans that would be singing, and I would sing the state or the song for MSU, but you wouldn't want to hear that. Okay, so the observation from the Lady Slipper is that time has slipped away once again. And if you don't have a memory like this elephant's head, we have now 48 different topics in our estate planning area. And we're going to be picking out some of those for our 2022 Fabulous Fridays series. And don't forget, these are also available at your local MSU County and Reservation Extension offices. And I do want to take an opportunity to reach out to you and say, I wish you all a very happy Thanksgiving. Please be safe and keep healthy. Now, our special guest, I want you to meet Jane Woolery. As I said, she's with our Teton County Extension Office. She has worked in the 4-H program for many years, and she has some really neat things that she can share. And so while I'm going ahead and getting rid of my sharing, Jane, I'll ask you to go ahead and just start to tell us about your involvement with the 4-H program.
Well, thank you, Marcia. And my head is still kind of trying to wrap around all the different opportunities people have to be generous with their hard-earned dollar. And my beginning in 4-H was as a 4-H member. I grew up in Hill County, just barely in the county line of Hill County, but we were 30 miles north of Joplin, and I did lots of projects in 4-H, but I raised market steers and a beef breeding project, and those two projects were what funded my education. So thank you to those people who bought those steers all those years ago, and some of the bulls that I've sold and things like that. That's what paid for my college education. Eventually, I found my way to Extension because I really held in high regard some of the colleagues I had. They became the people who were extension agents and specialists at the time. I admired for their professionalism, Marcia being one of them, Judy Ward from Havre, from Hill County, and I found my way to Teton County as an extension agent, and I've been there. I am in my 24th year in Teton County.
Yeah, and you've probably had a lot of 4-Hers come through the program, and now what kinds of things are your 4-Hers doing?
You know, we have such a variety. We have been really fortunate. Last year we had a volunteer who led a coding class and did that mostly online. So 4-H members were learning computer coding, which is, an obvious need in our world and career development. We've had some 4-H bioscience members over the years when that project was available. The most popular projects right now in our county are the swine project, horse shooting sports. We have a great shooting sports program, thanks to volunteers, of course, again, there, foods and beef. But I guess near and dear to my heart are the service and leadership projects that we do. So we had in 2020, which was kind of a rough year, as we know, we actually had 20 teenagers, 14, 18-year-olds who were willing to do all the planning, teach all the classes, organize the whole event, everything for our 4-H camp, our county 4-H camp. So 20 of them. We were down to 19 because of a scheduling conflict, and then COVID started to hit our county. And one of the things I really admired, one of the students said, you know what, I signed up to do this and I signed up to lead, and I didn't sign up to give up. So we're going to do what we can to make this happen. And we, right up until the point where our county health department, and there were some things going on, so we ended up not holding our 2020 camp. Then in 2021, 16 of those members came back, teenagers, to do 6 months worth of planning and a leadership retreat. There's just so much skill development in our camp counselor bracket and the leadership and everything. Anyway, they came back to plan this camp, and on Saturday before our 4-H camp, we found out that a fire was going to disallow us from using our normal campground. Mm-hmm. So they came in on Saturday, surprise, and they found a new location. They converted they had their classes already planned, but they just adapted, and the teamwork, and it was just amazing to see those teens at work. And I guess of all the projects I think about, that's one where I feel like there's so much career and professional development in that, and leadership development, and then service to others, service to the younger 4-H members, and that. They pulled off an amazing camp. The theme was Take 21. And one of the projects that they were going to do is teach kids how to do videography and editing. And because we ended up then not remote, we were in a town, the local theater allowed us to show those movies that the kids made in short term on the big screen. So they walked in, and I mean, our kids have some great tech skills, and they do robotics and lots of different things. But anyway, so these teens who were leading that class had, as all the kids walked in, they didn't realize where we were going. We just said, so it's going to be a surprise. We walked in one evening and the 4-H logo covers the whole screen, and then their names come up, credits roll. Anyway, it's just great. The 4-H program is great.
Yeah. And I've had the opportunity to judge some of the things that we have at 4-H Congress, and that Teton County always does such a good job. And part of that is the agents and the volunteer leaders that are in those communities. It makes a big difference. And, you know, I'm one of those that was a 4-H person, and I still think back of those wonderful leaders. And I thought that's all the extension agent did, Jane, was just work with the 4-H program. And boy, was I wrong. I didn't realize there's all this other. Well, rumor has it that you've had some fortunate things happen in your county due to some legacy planning of some of your residents. Tell us about that.
Yeah. So when I started in Teton County in 1998, we were just starting to receive funding from a generous gift. There were two gentlemen who farmed in the Greenfield area on the Fairfield bench, and that their names were Wagner and Leif Bow. And I don't know if it's Leif or Leaf, because I never did get to meet these two gentlemen, but boy, have I felt their impact. It has been just amazing. They were born in 1906 and 1908, and they inherited the farm from their parents. They never married, and they had the local lore is some really amazing ways to save $1. And by the time they started planning their gift, they had amassed $4 million that they left to so many different entities, but 4-H is one of the recipients of their generosity. And each year it varies a little based on how the investments are going and things, but on average, I would say our 4-H council receives $10,000 a year, which is the basis of almost our entire budget for our program. Of course, we do solicit for awards, and so we have a lot of generosity from other people in our community too. But we don't have to do any fundraising in our county to support our 4-H programs, which is almost unheard of. But additional to that, then that time that would normally be spent by leaders and members and agents and assistants in our office doing the fundraising can be converted into actual skill development and service to community. And I think that's part of what has created such a unique culture by these two men deciding to give such a gift. And additional to that, they also set up a scholarship that is specifically for Teton County 4-H and FFA members. And in the time that I've been there, 24 years, that has been $425,000 awarded to 4-H members and FFA members. And then on the $10,000, I mean, it's easy math. If it's, roughly $10,000 a year, that's $240,000 accumulation over, and I think people forget to look at that accumulation. I was thinking about your MSA example, and I did some quick math, because ever since you first taught about the MSAs, I have been doing one for me personally. And, some people go, oh, it only saves, close to 300 a year. It's 270 or whatever it is. And, but I added up the cumulative total, that's $6,100. And I'm happy to have that in my pocket.
Well, yeah, me too.
So yeah, that long-term, just, it's amazing. And we are we're very grateful for the generosity that people have to the 4-H program, whether it's monetary or in terms of sharing their skills with youth. And I think of, you know, through the pandemic, even it just became more clear how important that sense of belonging and that another caring adult in the life of a young person, those components that 4-H provides, and then being able to give to your community through service and just has made us appreciate some different aspects a little bit more, I think.
Yeah. Well, and one of our other speakers said that there are over 200 projects in the 4-H program now. And I came from the old days where there wasn't that much. And
Right.
even the ability to do your own kind of project. But I think what really matters too are the leaders. What's been your experience with leaders in the 4-H program?
Well, you know, I've seen it from a lot of sides now.
Mhm.
When I think of legacy, though, I have to just speak to the community club leaders that I had growing up in the Chirping Meadowlarks 4-H Club in Hill County. And it was a mother-daughter team, Louise and Adeline Sizer. And they invested so much in our community through investing in the youth in the community. And that you know, now we hear about things like diversity and inclusion. Growing up, I didn't hear that so much, but I did see it. Those women would go, and before a 4-H club meeting, a developmentally delayed adult in the community, she was a leader in our club. So here this woman came and she would sit at our club meetings and be part of that. And she'd feel part of something and we would learn from the differences that we had. They would go pick up, there was a family who, you know, I was probably a little unaware at the time, that really lived in some severe poverty. And they made sure that those students ended up in our 4-H club and got skills and mixed and mingled with many different families and were hosted in lots of different homes. They made sure that they had project supplies and that they learned skills, and they connected them with other people that in terms of just professional development. I know they connected a young man from that family with my dad, who then employed him and taught him lots of things in the farm and in the shop. My dad was had a builder's and engineer's mind, and that young man then became an engineer, has traveled all over the world doing engineering. And he wrote my mom this very nice note. So the importance of a thank you. He said, "There's not anything I do today that I didn't learn something about in the shop with Sterling." So, but I don't think my dad, without those leaders seeing the ways to connect people, that maybe he would have been as aware of that either. So, just in terms of legacy, just outstanding. Those women, what they contributed, and I try to remind our local leaders they're doing the same thing. I work with, of course, the camp director, probably the most in terms of just direct with a leader. My own daughters have come through that camp counselor program, and because of their exposure to that leader and the director of our camp, have learned really, really good skills. And I know they'll look back and think of all those many different things, and just the connection of different ages. So I think sometimes we think of our 4-H leaders as adults, but my kids, when they were young, were exposed to these leaders who were 12 to 18-year-olds who were showing them the way. And we all have leadership in us, but yeah, we've just been so fortunate in our county to have really, really great, dedicated volunteers.
Such an important part of the program. But I also want to give county agents a lot of credit, because it's people like you that I've seen you with these kids and helping them and encouraging them, and they're going to remember that forever. And I just hope that some of them will take advantage of the opportunity to tell you while you're alive instead of waiting till after you're gone. I had a young man write me, well, he was a couple of years younger, but it was after my mom died. And he told me a story about mom helping him learn to do a project talk or a demonstration, because at the time he stuttered. I didn't know that. I don't remember him coming over to the house. And he wrote me this long letter, and I'm crying as I read it about here's my mom as a 4 H leader. And it would be like you, the impact that you have on these youth. There are leaders for tomorrow. So we want to help them. And I know the 4 H Foundation does have special grants that they give for community ideas from the 4-Hers and leaders.
Right.
And sometimes it's just very simple. Let's put a bench out by the county fair building someplace. And then others, they end up making a track that people can go around a lake. And there's just wonderful things that are done. And so, Jane,
Well, and you may say those are simple, but when you think of a young person figuring out how to make that application, how to make that project happen, the application may be simple, the amount of money may be simple, but the skill developed is huge, especially based on those ages. And to your thing about, I hope that the 4-H members let you know, I have 3 who volunteer, 3 4-H alum who are now men in their 20s to 30s who are volunteering and doing the Youth Aware Mental Health Assistant piece with me. I now have some who are colleagues. So yeah, they're living that out, and I see it in our community. And some 4-H members who were there when I started are now the organizational leaders. So it's pretty fun.
yeah, well, that's great. Well, Jane, we thank you very much for being our guest today. And because I'm in the developmental stage of formulating next 2022, I'm going to try to convince Jane to come back and tell us some additional things that are going on in her community, because there's always something going on there. So, Jane, we thank you for joining us today. And Jane is going to do the chat panel for us today and try to tell me some of the questions. And I know there's one already from an individual that wanted to know if it's possible to do financial power of attorney if you have a green card and a certain other number. So I did check with some attorneys on that, and the answer is yes. If you're going to have it notarized, then you need to have a photo ID and information like that. So yes, you know who you are. Yes, you can do a financial power of attorney. So what other questions, Jane, do we have?
Okay, so we have a question coming. What is the difference between the woman who added her daughter to the title of the house and the daughter who had to pay taxes on her half of the house?
Okay,
Versus,
yeah.
versus, there's a little bit more to it. Versus the
Okay,
grandfather.
remember that.
Yeah, so hold on to that. Okay, I'll run that through one more time. What is the difference between the woman who added her daughter to the title of the house and the daughter who had to pay taxes on her half versus the grandfather who gifted the ranch to the grandson and the grandson did not have to pay taxes on the property?
Okay, here's the deal. Let's see that when you put your name or your daughter's name on your house, that example that I was giving was 300,000, and so it'd be 175. There wasn't a tax that needed to be paid there. Remember, it's less than the 11,700,000. But what it is it takes away some of mom's basis. When mom dies, she is only going to get a step up in her half. The daughter's still alive, so there won't be any step up. So what I would advise the mom to do is before you take an action of putting your kid's name on something like that, even your stocks and bonds, if they're going to be a joint owner. Now, see, a joint owner is different than we're going to transfer on death. Because if you have your name only on the house and it's worth 600,000 when you die, it gets a step up to the 600,000. So ask your accountant, check before you do something like that. And see, so I hope that shows the difference between the house and the ranch. They're really the same in a way. It's just that neither one had to pay a gift tax because it's under the exclusion. Okay. Want to add anything to that, Jane?
No, but, and I was trying, I'm thinking through some scenarios in my mind and trying to wrap that around. So
Yeah.
Yeah, I think there are just always those consequences that people have to look at. And whether they're talking with their accountant or an attorney, if I do this, then what's the consequence? If I do that, what's the consequence?
Consequence. Exactly.
Because I think,
Because there's always a consequence.
yeah, I mean, you and I, because I've reached out to you, we've had so many calls in Teton County this year, estate planning wise, and people just thinking, well, I'll just add my person, whoever I'm giving this to, I'm just going to add them to the title of the vehicle or the house or the land. And that has its own consequences in terms of, so, and correct me if I'm wrong. So, you might not end up with inheritance tax, but you may end up with a tax burden in
And it'll be
terms
the
of the
capital
value.
gain tax because of the
Yeah.
basis situation. But
Yeah.
most of us haven't heard about basis. And it took me a while, I'll confess. And the reason I want you to be aware of this is Congress is looking at what are we going to do with the federal estate tax and what are we going to do with this basis business. And I didn't talk about carryover, but really that is what happens when the donor, dad, gives it to the son, that 50,000. Well, it's a carryover of that basis. And at one time, when they passed one of the Tax Reform Act, they were just going to leave it at that. And can you imagine 3 generations down that we've got carryover, carryover, carryover. And here's this $50,000, and now the ranch is worth 5, 6, 10 million. Oh my goodness. So we need to be informed when those articles are coming out of the newspaper that they're throwing around these terms, carryover basis, step up in basis, and the federal estate tax. So keep your eyes on the newspaper because there's going to be a lot going on between now and the end of December.
Well, and I've heard as you're talking about legacy and legacy planning and generosity and gifting, and then you can think of gifting like the Bow Brothers did to our local Teton County 4-H, as well as many other entities that they gave to. I have heard of people who have looked at many scenarios for gifting to their kin that then would create so much of a tax burden that they ended up doing a charitable contribution instead, if that makes sense. So I think that's something for people to keep in mind too, who have some high value assets, whether that's land or so forth. There just might be some other ways to be generous that won't necessarily keep your heirs from earning a living or, having a farm or ranch to operate, but there might be ways to do portions of the property to try to reduce the tax consequence to that individual and things. So.
Yeah, and that would be true of our individual retirement accounts. If you read some of the articles, what they're saying is if you're going to leave an individual retirement account that's traditional, that's what you leave to the charity because the charity doesn't have to pay an income tax on it. You leave it to your kids, they have to withdraw it now in 5 years. And what's going to happen is it's income to them when it comes out of there. So that's where, again, the accountant or an attorney are going to share with you those consequences. And so you can make that decision better informed because the word Jane used, consequences, you know what those consequences are.
Well, and speaking of, there aren't other questions in the chat, but I will put this out. As you mentioned, accountants and attorneys, I always tell clients in our office who come in with questions and we try to get them answers, but you have done such a great job of writing and co-authoring so many different Mont guides on the subject of estate planning and financial management and things. I always tell people, so take these Mont guides, read them through, highlight the parts that are important, take sticky notes and put on with your questions, but that way you're educated going in. You have your questions down. The professionals, the attorneys and accountants don't have to take time that you're paying for to educate you. Let Marcia with her great resources and MSU Extension with their resources help educate you. Tax dollars at work, and then that saves you some money as you get in. The more you can understand ahead of time, I think, the better for you.
Oh, exactly. And that's what we're doing with our Learn at Home people. We've got several that didn't have computers. They can't participate in Fabulous Fridays. And so we're offering 100 of those the opportunity to have a study at home. And so what I'm doing every time is say, highlight, just like Jane said, underline. If you're a part of that generation, that's my hubby. He underlines things. Give me a different color of highlighter every time. And so, Jane, you're saying that we don't have additional questions this time?
We don't. We do have a nice comment from Lynette Perkins, thanking for learning some of the successes of our 4-H in Teton County and the appreciation for the use of gifts. And I mean, honestly, through the years, the students who've been recipients of the Bow Brothers scholarships, but also almost every year we have 1 or 2 4-H members from our county, either through winning a state contest or completing a state award application and being chosen, that have attended National 4-H Congress. And because of the generosity of the Bow Brothers, our 4-H Council pays half of their remaining. The 4-H Foundation, of course, kicks in some. And so all those different gifts make sure that these students who have reached really high success, high goals, have an opportunity to do that. So let's see, we're just a week from Thanksgiving. We have 2 4-H members headed to National 4-H Congress from our county again this year. So
Oh,
very
congratulations.
exciting.
That's super, super. I'm glad they get to go.
Yeah.
Well, it's time for us to bid goodbye and say it's been a real pleasure again having you here, Jane, and to all of you out there. We've been together here for 8 Fridays, and I feel we should give some award for somebody that really stuck in there for all 8 times. But we do thank you, and we hope that you will join us for our 2022 series. And because you're on our mailing list, we call it a MailChimp, we will send you out some information when we've actually set those dates. And you can sign up again for Fabulous Fridays 2022. So in the meantime, do have a great Thanksgiving, but do be safe and keep healthy, because we want to look into 2022 and do some more exciting things. So bye-bye.
And Marcia, not to steal your end, but to add a little bit to it, I just did a presentation for a group on giving, and we talked a little bit about Grandma's Yellow Pie Plate Month Guide. People might want to look at that ahead of the holidays. There are other things you can give that wouldn't have a lot of tax consequence, but would have a lot of meaning for people. So think of that. That could be a way to save on your gifting budget and give something meaningful memento or something with a great story. So,
and yes, that would be the important thing. Include the story, because remember, we had the bell and we don't know anything about the bell. Okay. So bye-bye all. Bye, Jane. Thank you so much.
Thank you, Marcia. And Carrie.
And Carrie, yes.